Now, that's where it goes back to when we say that property investing is easy. These are the discussions that you're having now with a family of four saying that I'm not happy with this rent, but you know that they might not be able to pay.
You are excited about property investing and you're purchasing properties that are cash flow negative. You purchase 5 properties that are cash flow negative. I mean, you can only be excited until so much, right? Now that you're losing 10,000 from these 5 properties on a monthly basis, now the question is that, should I purchase the next property? This is something that I would like everybody to actually purchase, right? If you can, or if you're looking for a book that you wanted to purchase that speaks about property investing and really speaks about the realities of property investors, the name of the book is Trump Strategies for Real Estate. The person that wrote the book is George H. Ross. George H. Ross, right? So now there's this topic that he speaks about that I know for a fact that every property investor has to have, right? This is negotiations. Yo, guys, I don't or I can't express how hard a negotiation is, especially if you are trying to get an offer that is way below what they are asking for. Now, if they are asking for, say, for instance, they're asking for 600,000, and you know that according to your numbers, you were supposed to ask for 300,000. That's half of what they're asking for. Whereas the market value is 800,000. So they're already giving you a discount of 200,000 and you still want to decrease it by 300,000 from where they are. There's nothing that is as intimidating as negotiating a property price, especially if you're coming from a perspective of saying that I'm not really sure if I should negotiate it, number one. I don't want to put in an offer that's going to offend these people. Now he speaks about something that's called aura of legitimacy, right? So aura of legitimacy basically means that if I'm sitting or if I'm going with somebody that's really powerful within the space, at some way it's going to disturb the thought, the thinking pattern of the person that I'm negotiating with. So it's like with me. Say for instance, if you're negotiating, the two of us, and we come through into a room, and I come through with the president. Now, be it that you like him or not, be it that you like him or not, right? There are a whole lot of things that are happening, but be it that you like him or not, if I come in with the president, already that sets a statement for you in that room. Now it becomes harder for you to negotiate with me if I'm sitting with the president, right? Now, how do we implement that and put it into property investing?
I was wondering how you're going to use that.
A whole lot of estate agents were using aura of legitimacy when it was 2020, right? Remember when they were saying that you should actually purchase the property right now because interest rates are at the lowest. Number one, they were saying that you should buy it at market price because your bond would be the same as how much you would be paying at 10%. That's the first thing that they said. Yes, so it's Trump Strategies for Real Estate by George Ross. Yes, that's the one. So, firstly, the order of legitimacy that they were using was the interest rate, right? Saying that the interest rate is at its lowest, so you need to be purchasing the property right now. That is a way of saying that it's an order of legitimacy, saying that because of this big thing that's behind me right now is at this particular point, you need to actually be buying the property right now. And now we're saying that every negotiation requires you to do a fact check behind it. Now, how many times did we go through to a property, know our facts by the time we go view the property, and then by that time that we get there, we're asking them as if we don't know anything.
Every time.
Every time.
Not even once did we go to a property without any knowledge of the market price, not understanding the rentals in that area, not understanding the crime in that area, not understanding the demographics in that area, not understanding how many schools are there, how even if we've never been to that area, that's information that we have. By the time we're there, we're giving the estate agent the role to say, let's hear what you have for us.
Of course. So now what happens most of the time is that when you get to a property and you didn't check your numbers, right? You're going to walk into that particular deal blindly, right? Now, if I've checked my property and after listening to what the estate agent says, I'm able to tell them that the last property that was sold for X amount of money. This is the average price of this particular area. Now that I can tell you what's the particular price in this particular area, this is when I'm saying that, you know what, based on that, I'm purchasing the property at X amount of money because this is when I'm going to be making a profit.
Yeah.
Yeah.
So
So that was the art of it. Yeah.
yeah, man, I love negotiating, you know, because negotiating level, it really takes out the beast within you, that beast that was sleeping. I've seen this like about with 5 of our clients, whereby like the ladies were really sweet. I don't want to lie, man. They were really, really sweet, man. Even the gents, they're really gentlemen. And then now when we expose them to guys, when it comes to business, it's a numbers game. It's not about, yes, you do need to be a gentleman, you need to be a lady, but now 90 rules or for entrepreneurs, it says that we need to know our numbers. So what does this mean if I go into a deal and I can see that it's not making financial sense? It's either I'm going to negotiate or I'm going to walk away from it with them. Now, that's where it goes back to when we say that property investing is easy. These are the discussions that you're having now with a family of 4 saying that I'm not happy with this rent. But you know that they might not be able to pay. So then what's going to happen? Or even sometimes you have a discussion with a family that they lost their jobs. Hence, a lot of people think it's easy. But step into our shoes. Last time during the live, we spoke about this. We are selling one of the properties that we have. So we had to sit down with the family and tell them that, guys, unfortunately, because of the interest rates, we're not getting our cash back. We can't be taking money from our pocket every month to be funding this. So it's sad. It's difficult. But these are the conversations that we need to have. So property investing, I'm sorry, I got caught up with that thing of easy. And again, where can I negotiate? We're not saying that negotiate everywhere. There's some places whereby you can't negotiate, because I know now you'll be saying, oh, gents, you want me to come to your workshop? Let me negotiate the ticket now. So more importantly, what I'm saying is that we really need to understand where can I negotiate, and then if I do see the opportunity, I just max out.
And the last book now.
The last one for me is the cash flow quadrant. We wouldn't leave this one out. I know some people have beef with it, but we wouldn't leave this one out. So it's called Cash Flow Quadrant by Robert Kiyosaki. So I'm going to show you just one thing, and then we're just going to go into it. There we go. This table over here. So we've got E, B, S, and I. We've got E, B, S, and I. Reason why I wanted to highlight that, right? The E we've got for employee, and then we've got B for business, and then we've got the S for self-employment, and then we've got the I for investment. I
should say I for now. Investment.
I like how there's a clear separation between all of them. And now the reason why I wanted to bring this to life is that with most of the people that are reaching out to us, or with most of the engagements that we're having with property investors, is that you find out now there's no clear separation between themselves and the business. That's why now it becomes really difficult to gauge that, am I really growing with my property investing journey or not? Because now you find out that you as the individual are doing good. Your pay slip is doing good. But when you're looking at the returns, so this pay slip afforded you 4 properties. Now, does that necessarily mean, Lebo, that I've got a good business model by what we just said?
No. There's no structure to it, especially if they are all registered under your particular name, right?
So if I'm running cash flow negative, so that means at the end of every month, I'm not getting cash from each one of them. But now you know that I've got 4 properties, and you're happy that I've got 4 properties. But now I'm running cash flow negative. So what would you say then, going back to structure, is my biggest flaw?
Already, the cash flow negative is already killing you, because now you're not motivated to purchase the next property. I'm sure there's a lot of people in the live right now, they purchase the property and the property is running cash flow negative. Now the thing is, if the property is running cash flow negative, you can only be excited until so much, right? So say for instance right now, you are excited about property investing and you're purchasing properties that are cash flow negative. You purchase 5 properties that are cash flow negative. I mean, you can only be excited until so much, right? Yep. Now that you're losing 10,000 from these 5 properties on a monthly basis, now the question is that, should I purchase the next property? Now, purchasing the next property is going to be looking at your affordability. Are you able to afford to lose more than 10,000 on a monthly basis? Now, if you're saying that, yes, you're still willing to lose money, you can only reach to a certain number of money, right? So say for instance, if right now you're earning 50,000, you're losing 10,000 based on your 5 properties right now. Now, if we're saying that your monthly costs or your monthly expenses were 40,000, this means that you need to eat off from that 40,000. Now, it doesn't make sense for you to keep on saying that I'll keep on running cash flow negative until I have a big portfolio. However, when it's on the other side, whereby now you're running cash flow positive, now that puts you at a better position. Because if I'm making 10,000, man, I'm motivated to get 10 more thousand. I'm not motivated to lose 10,000.
Yeah, so what we're going to do, I think here's the interesting part. Next week, Tuesday, what we're going to do is that we'll be speaking about cash flow negative. And coming forth, even next week, we're having a live with one of the people that we hosted the workshop with. She's an accountant. I love accountants because accountants, they're numbers people. We speak about numbers. So I come to my accountant and say, hey, I bought another property before he even claps hands for me. He's like, let's see what's going on.
Let's look at the numbers.
Let's look at the numbers. And that's what we use. When we sit down with clients, it's more of let us look at the formula and see that is it making sense?
Yeah.
If not, we should really see where we're going wrong so that we can learn from that.